Hey, what's going on, guys? If you want to trade like institutions and boost your profits in trading, then this video is for you. I am de-embedding FX. I have been trading the Forex market for a couple years and have managed to gain quite a substantial amount of profit from the market. In this video, I'll be going over a step-by-step guide on how to trade order blocks, and by the end of the video, you'll know how to spot and trade order blocks like a pro. Alright guys, let's jump right into the video. So for a lot of the new guys who are new to trading, you're probably wondering, what are order blocks? By definition, order blocks are areas where institutional traders and banks are looking to place large orders and get into the market, which creates high probability reversal or continuation zones. Why does this matter? So if you think about the small traders, like you and I, you have small traders and you have the banks. We are the small fish, the banks are the big fish. And what we want to do is move with the big fish. As a small fish, the best way to make money is to move with the banks and with the smart money or institutional traders. So if we scroll down a little bit, just for a quick example of what an order block looks like, we have a down candle on the 4-hour chart. This would be considered a 4-hour order block. So what is it? It's a down candle before an impulsive move up. What this is basically saying, guys, is that inside of this candle right here, we have this big impulsive move up, which means there are institutional traders and banks which pushed all of this price up, okay? So if we think about it, the small fish, the small traders, we aren't moving the market. What is moving the market is the banks and institutions. So if you look right here at this big impulsive move up, that means that there was a bank, institution, whatever, that was pushing the price up like this. So what you can expect is for orders from the banks or institutions to be stuck in this zone right here. So what you want to look for is price to come back into the zone, bounce off of it, just like that. So if we play this out and just see what happens here. Alright, just like that, guys, we have our 4-hour order block, our impulsive move up, price slowly grinds back into this order block, where banks, institutions have all of their orders in here. Price comes in, bounces off, rides up for the continuation. Alright guys, so now that you guys kind of have a little introduction to order blocks and what they are, let's just go over a few examples to kind of show you guys how to identify them and what to look for when you are trying to find order blocks. Okay, let's just go to a random pair. We'll do CAD USD. So currently we are on the 4-hour time frame. So each one of these candles is going to be 4 hours long. So what we're looking for is 4-hour order blocks. Alright, here's an example. So what do we got, guys? We got a 4-hour up candle before an explosive move down. Okay, so you see this big red candle right here. That's what you call an impulsive move. It's a lot bigger than every other candle, right? If you were to compare this to every other candle size, it's a lot bigger. What does that mean? That means that there was a bank or an institution or a cluster of banks and institutions that sold right in this area, creating this big sell-off right here. So what you can expect is that the banks and institutions will still have more orders to sell to the downside. So whenever price pulls back into this block, okay, this 4-hour order block, up candle before an explosive move down, you can expect that banks and institutions will have more orders looking to get filled. So what happens? Price moves down, comes back up, And as soon as it comes right back into the order block, you have a massive sell-off, right? Causing this big move down like that. And then again, we have another one right here. Okay, if we were to just go to replay, what do we got? We have a 4-hour candle, right? Up candle before an explosive move down again. So what do we want? We want to see price to come back into here, look for banks, institutions to get more orders filled, and then you want to catch it on the way down. Okay, let's just let price play out. Right there, it was quick. Price pulls back into the zone. We get the sells we're looking for. Everyone's offloading their sell orders. And then price pulls down like this. So like I was saying, guys, as small fish, we want to trade with the big guys. So we would want to look to catch the exact same trades they're catching and catch the moves that they're also looking to do. So these past examples were examples of bearish order blocks, right? So an up candle before an explosive move down is a bearish order block. Because once you get this explosive move down, you know that banks are looking to sell, which makes it bearish. So let's go over some examples of bullish order blocks, okay? Let's just see what we got. Here's a quick example. So we got, let me just change this real quick. Normal. So we got a down candle this time, okay? Because now we're looking for bullish order blocks. So a bullish order block consists of a down candle before an explosive move up like that. So what you can expect, again, guys, is that banks, institutions, everybody is going to have their orders inside of this block, so this gray zone right here. And when price comes back in, we're looking to ride price back up to the upside. And order blocks, they work in any industry, right? We can find these in crypto, we can find these in futures. They're really versatile. They're not just a one industry thing. Down candle, up, right? This down candle right here led to this explosive move up. When price comes back in, we have the rebound like that. And we'll just go and find one more example to show you guys that it does work in every industry. We will go to Bitcoin here. Okay, we'll even go to a different time frame. We'll go to the 12-hour time frame. And let's just see what we got. So again, this is almost perfect, but it did get front ran a little bit. We have a up candle before an explosive move down, right? Up candle, explosive move down. So what you can expect is that everyone's going to have their orders inside of this block. It did get front ran a little bit, but we had price almost come back into the zone, and then we have this big sell-off right here, okay? Let's find a better example where price does get tapped in. Front ran right there again. Okay. So right here is a perfect example, okay? So again, we're on the 12-hour time frame. Each one of these candles right here is 12 hours long, right? It shows 12 hours of price action. So what do we got? We have 12-hour down candle, which led to this big move up right here. Now what we want is price to pull back into the zone, orders to get filled, and to ride it back up like that, which is what we've seen. And yeah, guys, this works for every industry, every time frame, right? We'll go down to, we'll even go to futures. We'll go to the S&P 500 on the hourly. Actually, we won't do this because it has a stupid time frame blue lines. We'll just do another crypto. We'll even do Solana. So we're on an hourly chart. Okay. Let's see what we got. Right here. Kind of a bad example, but get the gist of it. Explosive move up from this down candle. Price comes back in, and we see the rejection coming out from this box, showing that people are interested in buying inside of this box. All right, yeah, that's kind of how we identify order blocks. And next, we will go over how to trade order blocks. Now let's go over how to trade order blocks. So this is where a lot of the useful information that we just went over starts to come into play. All right. So if we just go down to this little drawing I have, when you're looking for order blocks, it's best to try and find order blocks that are in a trending market. Okay, so if you just look at this little drawing, we have lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? So what are we doing here? We're obviously trending down, okay? So it's best to look for order blocks in this kind of markets, whether we're trending down or trending up like this. And we'll just kind of go over examples after I guys show you this, or after I show you guys this. So again, right? What do we got? We got a higher high, lower low. We break this high right here, which means that now this becomes a higher high. This low comes down, and then once we break above this high again, this now becomes lower low, right? So a series of lower lows and higher highs creates an uptrend. As you can see here, we're clearly trending up, okay? So it's important to look for order blocks inside of markets like these. So what do we got? Downtrend, okay? Now we're going to want to be looking for order blocks that led. So if this is, say, a 12-hour order block right here, this gray box, up candle led to a big explosive move down. We broke structure right here, right? We broke this low. Now we want to look for a pullback into that up candle that led to the explosive move to catch the rest of the move down. So let's go over some examples. So we'll start right here. So what do we got? We have down candle right here, right? Before an explosive move up, which is that green candle right there. And what happened? This green candle broke and closed above this high right here, right? So that becomes the break of structure. Now look what we're saying is what we want to do is we want to look for a pullback into this order block to catch the rest of the move up like that, okay? So clearly, if we just zoom out a little bit, you can see that we are moving in lower lows and higher highs, or sorry, lower highs and higher highs here, which means we are in an uptrend. So what we basically want to do is just ride the rest of this trend up. So for stop losses and take profits, it's just simple, guys. Once you have identified the order block that you will be trading, all you got to do is we'll go into replay mode. Okay, so we have identified that this green candle broke above this structure right here, break a structure. We have our daily order block right here, And we know that because it is the down candle for the explosive move up. All you want to do, guys, is just set a limit order. And this is how I do it. I set a limit order at the top of the order block, and I put my stop loss just below the other order block. And I want to target whatever the high is for this push, or at least have a take profit and then set my target a bit higher, right? Because what we're doing is we're looking for lower high, higher high, lower high, broke structure. So now we want to see a pullback and we want to ride the rest of this up. So let's just play this through. Right? Perfect. Price comes back into our limit order that we have set. Pulls back in. We're looking for that explosive move back up. 1 to 3. Okay? So if you were risking, let's just say $100. So if you lose a trade, you'll lose 100. If you win, you would have won 300. If it was $1,000 and you're risking to lose $1,000, you would have lost $1,000. Or you would have made $3,000, which is what happened. So let's go over another example. And this next one I actually did catch. This was a big one I caught. So if you look right here, what do we got? We are moving into a downtrend, as you can see. So we want to look for sells. We have this green candle, which led to an explosive move down, broke above this low. So this is the candle that led to the break of structure. Next step, put your entry right at the bottom of that candle. Place your stop loss just right above the highs of the order block. Okay, what happens? Price comes down. Pulls back into our order block. Sells off. Catching a 4.55, which is amazing, guys, right? If you're risking $100, you'll make $450. If you're risking $1,000, you'll make $4,500. So yeah, maybe we'll just find one more example for you guys. Here is another one. Perfect. So we have this green candle right here led to the break of this bottom. Hasn't been tapped in yet, so now you can expect whenever price pulls back into this order block to get the sell off. Okay, so we'd want to set our limit order, bottom of the block, stop loss just over the top. $2.74. So if you're risking $100, you would make $270. If you're risking $1,000, you'd make $2,700. So this is how to trade off of order blocks. And next, we'll just be going over common mistakes to avoid. For the last part of the video, guys, we're just be going over some mistakes to avoid and just some tips to help you out when trading with order blocks. And the first thing is going to be knowing when to trade and when not to trade, okay? So when the market is ranging sideways like this, we have no clear direction on if price is going up or down. This is a choppy market, right? We don't know if price is going to go up. We don't know if price is going to go down. Markets like these, you want to avoid trading because we don't have a clear direction, right? Versus when you look at a market like this, where clearly we're making higher highs and lower highs. We know we're going up, right? Trend is telling us we're going up. So obviously we're going to want to look for longs because we know price is going up. Same as when price is trending down. Obviously, we're going to want to look for sells because we know that price is trending down. So we want to look to catch the sells to keep riding the trend down. So does that make sense, right? If we're trending up, we want to look for longs. We're trending down, we want to look for shorts. And when we're ranging like this, don't get chopped up in this price action, especially if you're new to trading. You definitely can trade it if you are good and you just have proper risk management. But if you're new, just ignore this, right? Ignore markets that just go sideways like this, okay? Like clearly there's just no direction on which way your price wants to go. It's just going sideways. So that's one thing to avoid, is just choppy markets and not trading with the trend. Another thing to avoid is just don't have your stop loss too tight, okay? So if this is our order block, right, it's good to have a tight stop loss, but don't have it so tight where if price just comes to the top of your wick, right, you get stopped out. Because you got to remember, depending on what you're trading with, you probably have spread too. So even though price is right here, you could get stopped out with your stop loss up here because of the spreads. So just make sure to have your stop loss just not much, but a little over, especially when you're new, a little over top of your order block. And when you're taking profit, guys, if you hit a 1 to 2, start looking to scale out of your position. You don't have to exit your whole position, but you should be looking to start taking profits, okay? The markets are not forgiving. They will humble you quick if you don't take profits. The markets will definitely take profits from you. Another thing, especially for the new guys, is to just backtest the strategies, okay? Just pick a random pair, go back in time, right? Just scroll back and just backtest. Look for order blocks. Like we talked about, look for the order blocks, the break of structures, and just backtest and see how stuff like this plays out, okay? You're not going to get better if you're not backtesting, because what backtesting does, it just gives you historical data on what has happened in the past with the markets. And when you know what happens in the past, you know what's going to happen in the future. So backtesting is just definitely an important thing to do. Just go back, right? Do exactly what we were looking for on order blocks and just test it out and just see how things play out, see what works with what. All right. Another thing to avoid is just over trading, guys. You should be picking the best setups and only trading the best setups. Over trading and revenge trading is going to blow trading accounts, and it's going to mess up your psychology more than anything else. If it's not a good setup and you don't have the gut instinct on it, don't go with the setup, guys, because majority of the time you're going to lose. And what happens when you're losing more is you tell yourself that you're not a good trader, and you just get in your head, and it really messes with your market psychology, okay? So only pick the best setups that you have back tested and you know are going to work good. If you guys are trading with live accounts and you're new, I would highly recommend going with a demo account, so just paper trading. If you are going with live accounts, just put like $100 in, right? It doesn't need to be much, but I can almost guarantee you, if you are new, you are going to blow your account. Every successful trader has blown their fair share of accounts and has lost a lot of money. And it's not going to be any different for the new guys, right? It's just a part of training and growing. You're going to blow accounts. So instead of loading an account with $5,000, which you are going to blow, just put $100 in there and just play around with it. Or paper trade, right? Paper trading is a way to trade where you're not using real money, but it's simulated. So it's exactly like trading. Tips for success. When you're picking order blocks, right, it's good to pick order blocks that have other confluences. So it's something that I will go over in the future with you guys in future videos. But what I like to do when I'm picking my order blocks, and I'll go back again to that JPY setup that I took. Where was that at? Right here. Right, looking for other confirmations with your order blocks is going to help your strategy a lot more. So what I do, and we'll just go over this briefly, is I use the 20 and the 50 MA, and basically what this does is it just tracks the average moving price on the past 50 days and the past 20 days. But what it also does is just act as support and resistance. Okay, so you can clearly see that when price pulls up to this purple line, it rejects off of it, so it's just another form of support and resistance. Do you want to trade solely based off MA action? No, but you want to use it in confluence, right? So if I see I have a 1-day order block right here, which led to a break of structure, like we talked about, right? Break structure. So not only do we have this order block right here, but we also have the daily MA coming into the zone. So now we have not one reason to sell, but now we have two reasons to sell, right? So this particular setup goes from a good setup to a great setup. And just finding other confluences to go with your order block setups or any other setup is going to help you guys out a lot. And then yeah, just stay disciplined, guys, right? Only pick the best setups. Don't rush your trades. Look for the best opportunities and just take those. It's better to find the best setups and go in with more size than to just take every setup you see with little size, right? At least you know when you're taking the best setups and you lose, that everything was in your favor and you just happen to get stopped out, because that's what happens in the market sometimes. When you're taking every setup you see, right, you don't know why you're losing, messes with your psychology, and just on and on and on. It's best to just pick the best setups and go with those. And yeah, that is just some common mistakes to avoid and just little tips for success. Alright guys, we've reached the end of our video. Just to go over what we learned that order blocks are a block or candle before an explosive move up or an explosive move down, where banks or institutions are trading off of. And what we can expect is for orders to get stuck inside the candles that led to the explosive move up or down. And what you want to look for is price to pull back into these blocks and reject for continuation or reversal patterns. You guys have learned what order blocks are and how to spot them and how to trade them like a pro. Now it's time for you guys to hit the charts, comment your setups in the comments below and how you guys are making out with that. If you found this video helpful, please smash the like button and subscribe for more trading strategies that I will be posting in the future. Don't forget to ring the bell for notifications. I will be posting a lot more videos in the future. Just keep learning, guys. Stay disciplined. Pick the best setups. Make sure you guys backtest. Try and learn as much as you can, right? Trading takes time, but you'll get there, I promise you guys. Let's trade smart, and I'll see you guys in the next video.